Today, I want to look at the loanDepot IPO that is happening on Thursday, February 4th. If you want to learn more about the company, their products, and their S1, and need some help deciding if you should buy or pass, stay tuned. What's going on, investors? My name is Jose and welcome back to Rico Suave IPOs, the best place to learn about new companies going public and how to invest in them. Today, we are looking at the loanDepot IPO. If you would like to request a video and to receive many other perks, there's a link to my Patron in the description. Founded in 2010, loanDepot is a customer-centric technology-empowered residential mortgage platform with a widely recognized consumer brand. As of September 30, 2020, they originated over $79 billion in loans and have experienced 116% year-over-year growth. According to Seeking Alpha, loanDepot, ticker symbol LDI, has filed to raise $300 million for the company and selling shareholders from the sale of its Class A stock in an IPO. This is a price range of $19 to $21 per share and a company valuation of $11.2 billion. My man Donovan Jones thinks that this IPO is pricey and he's going to pass on it. We are going to look at the S1 to make up our own minds. Here's a 1-minute video from the loanDepot YouTube channel that explains more about the company products and their services. But before that, a quick shout out to my patrons. Your generosity and contributions allow me to do what I love to do and keep the channel growing, so thank you. If you want to become a patron, there's a link in the description.
Oh, hey, thanks for choosing loanDepot. Before we take our next steps, let us tell you a little about ourselves. We opened our doors in 2010 with our headquarters in Southern California. Today, there are over 200 loanDepot branches and communities nationwide, and more than 2,000 lending professionals across all 50 states. We've helped hundreds of thousands of homeowners buy new homes, refinance their existing mortgages, and take advantage of their home's equity in creative ways. Whether you need a fixed rate, adjustable rate, conforming, non-conforming, FHA, VA, jumbo, or other type of loans, loanDepot offers it all. And we're here to help. It's our goal to make getting a loan easier and faster than ever, using industry-leading technology and local experts that really know their stuff. Applying for financing has never been cooler with loanDepot's digital mortgage application. But don't just take our word for it. Put it to the test for yourself. Just contact us to get started today. We can't wait to work with you.
As you can see, loanDepot started in California and now has over 200 locations in the US and over 2,000 employees. They can help you buy a new home, refinance, or use your home equity in creative ways. Their digital platform for digital mortgage application makes it easy and convenient for customers to apply and connects them to an industry expert if they need help. Overall, just a great platform. You can visit their website to find out more about the company. Here's something that I found super awesome. loanDepot is the official mortgage provider and proud partner for the MLB, or Major League Baseball. And you know, the MLB has some players that own some big homes, and the franchise owns big stadiums as well. So this is a big accomplishment for the company. Now let's look at their S1 to learn more about the company's financials data. This S1 was filed on January 27, 2021. According to the S1 in 2020, the company had a total revenue of $3 billion, a 226% increase from previous year. They had a net income of $1.4 billion and a net cash flow of negative $1.4 billion, which means that the company is using all of their net income to continue funding operations. They have $8.6 billion in total assets and $7 billion in total liabilities. The company has more assets than liabilities. This is something I like to see on the balance sheet. So, should you invest in the loanDepot IPO? Well, I really don't know why this company is going public, guys. They have a positive net income. Their revenue is up 200%. They are partners with the MLB. So what do they need $300 million for? Well, I went back to their S1, and under the use of proceeds area, they stated that we intend to use the net proceeds to us from this offering together with the cash on hand to purchase 9,410,000 Holdco units together with an equal number of 9,410,000 shares of our Class B or Class C common stock from exchanging members, including our CEO and certain of our other officers, at a purchase price per unit based on the midpoint of the estimated price range set forth on the cover page of this prospectus, which means, guys, that they want to use the money from the IPO for share buybacks. And this is a good practice that increases the price of the shares by reducing the number of shares that are standing in the market. I hope that was not all confusing for you guys. However, like my man Donovan Jones, I also think that this IPO is pricey at almost 4 times the company's revenue in 2020. So I will be passing on this one. This doesn't mean that the loanDepot is not a great company, because it is. I'm just worried about the amount of competition from other companies like AmeriHome, Rocket Companies, Caliber Homes, Home Point Capital, and more. But of course, guys, that's just my opinion. I'm not a financial advisor, and this is not financial advice. So please make sure you do your own research and let me know what you guys think in the comments below. As always, guys, if you like this video, make sure you drop a like, subscribe to the channel. But more important than that, guys, make sure you take care of yourselves. And I'll see you soon.
I bring up the pain, Rick service the mind. I make the market rain like acid rain. An investing channel you ever know, ya. I think you'll go your house, your money, leave you broke, son.